Welcome to this Elite Academic Explainer for IGCSE Accounting 0452. Look, if you're targeting that A-star grade, you are in exactly the right place. I'll be guiding you today as both your subject specialist and former senior examiner. We're stepping way beyond basic record keeping to master an absolute architectural requirement for your success, the limitations of a trial balance. This right here is the critical bridge between raw data entry and high-level financial intelligence. So grab your notebooks, get focused, and let's elevate your understanding.
Here is our roadmap. We're going to conquer 5 crucial phases today: conceptual architecture, technical execution, AO3 interpretation, modern reporting, and finally, my personal favorite, examiner insights and pitfalls. Let's get straight to it.
Okay, let's dive into Phase 1, Conceptual Architecture.
Before we touch a single number, we have to talk about vocabulary. This is absolutely crucial. The syllabus dictates a strict transition to modernized international terminology, and if you want that top mark, you must use these precise terms. The grading rubrics for the 2026 exams, straight through to the 2028-2030 syllabus updates, are totally unforgiving here. We're no longer accepting outdated phrasing. It's irrecoverable debts, not just bad debts. It's owner's equity when discussing the owner's claim on the business. Believe me, examiners are actively hunting for candidates who command this modernized vocabulary.
That precision applies perfectly to the core accounting equation: assets equal liabilities plus owner's equity. Duality must be maintained at all times during the fiscal period. Think of it like physics, right? Every financial action has an equal and opposite reaction. If your trial balance balances, well, the mathematical duality was respected. But, and this is a massive but, a perfectly balanced trial balance can still hide massive conceptual errors, and that is exactly where students get trapped.
Let me show you what I mean. The tension between the prudence concept and the historical cost principle is a prime example. Historical cost dictates that we record assets at their original purchase price. But what happens if the market value of your inventory suddenly just plummets? Well, that's where prudence overrides historical cost. Overstating profits by ignoring potential losses is a direct violation of the prudence principle. You must anticipate losses, but never anticipate profits. Navigating this exact conflict between these two concepts? That's the hallmark of an A-star student.
Moving right along to Phase 2, Technical Execution and Method Marks.
I am going to share a massive insider secret with you right now. Method marks are awarded even if your final balance is totally incorrect, provided your logical flow is visible to the examiner. When you face complex adjustments for depreciation or inventory valuation, demonstrating your advanced technical methodology is non-negotiable. Look, even if exam panic sets in and you botch the final arithmetic, if I can see your logical workings clearly mapped out, you secure those vital method marks. So please, show your work.
That logical flow relies entirely on procedural logic. Step 1, identify the correct source document, like an invoice or a credit note. Step 2, record that data seamlessly into the books of prime entry. And Step 3, post it accurately to the T-account double entry system. This is your cause and effect chain. If you understand exactly how a single source document physically feeds into the ledger system, you completely bulletproof your trial balance against careless omissions.
And mastering that ledger system requires absolute perfection with T-accounts. The distinction between balance B/D brought down at the start of a period and balance C/D carried down at the end is paramount. I literally cannot tell you how many potential A-star papers I've graded that were completely ruined because a student flipped these two. Mixing them up destroys the entire chronological integrity of your trial balance. Drill this mechanically until it's second nature.
Now, what's really interesting about this slide is another massive pitfall: the mathematics behind trade discounts versus cash discounts. This mistake just cascades through everything. Trade discounts are deducted before entering the transaction into the main double entry system. Cash discounts, however, go strictly in the discount columns of the cash book. Miscalculating the percentage step by step between these two will mathematically lock your trial balance out of balancing. Don't let a simple percentage misstep cost you your grade.
All right, let's level up. Phase 3, AO3 Interpretation and Ratios.
Assessment Objective 3 is all about evaluation and investigative skills. Calculating ratios, that's just the baseline. We need to debate the cause and effect.
Take a look at this. In year 1, our current ratio is a very healthy 2.5 to 1. But in year 2, it drops alarmingly to 1.1 to 1. An A-star candidate doesn't just state the drop, they investigate why. Has inventory been vastly overpurchased, locking up liquid cash? Or perhaps trade payables are being settled far too slowly, damaging supplier relationships? Or, maybe cash reserves were completely depleted due to heavy capital expenditure. You have to aggressively debate these scenarios in your answers to prove you actually understand the firm's liquidity crisis.
We hit similar investigative roadblocks evaluating profitability, especially with varying depreciation policies. If firm A uses the straight-line method and firm B uses the reducing balance method, direct interfirm comparison is practically impossible. It's like comparing apples to oranges. You have to explain that you understand the quality of the profit being reported and recognize how selecting different accounting policies can legally manipulate a company's bottom line.
And remember, a trial balance also has a massive blind spot. Non-financial factors. It cannot measure staff morale, location, or market reputation, which is critical because highly motivated employees or a stellar brand reputation drastically impact your return on capital employed and your long-term survival. If an exam scenario asks for an evaluation, always bring up these invisible non-financial factors.
So let's bring this into the real world with Phase 4, Modern Reporting and Transparency. We are in an era where modern AI-driven fintech platforms like Xero handle mountains of automated data entry for banks, owners, and tax authorities. But here is exactly why your skill set is irreplaceable. The AI relies entirely on a human accountant to correctly classify items as accrued or prepaid to maintain legal transparency. If you feed an uncorrected trial balance error into modern accounting software, the AI is confidently going to generate a disastrously wrong financial statement. Human interpretation is the ultimate safeguard.
Which brings us to our final section, Phase 5, Examiner Insights and Pitfalls. I am putting my examiner hat firmly on for this one. Here is the classic trick question that appears constantly in past papers, confusing revenue items with capital items. Listen, if you classify the installation costs of a new factory machine as a day-to-day revenue expense instead of capitalizing it, the cascade effect is brutal. You will understate your assets and severely understate your profits. Learn the difference for sure. So, what is the ultimate exam day checklist for securing top marks? 3 rapid-fire rules. 1. Maintain clear handwriting in your ledger accounts. Seriously, if I can't read your numbers, I can't give you method marks. 2. Manage your time strictly by question weightage. Never spend 20 minutes agonizing over a 5-mark theory question. 3. Do not ignore state symbols in manufacturing accounts. Oh, and for exam pressure, remember the mnemonic REAL: revenue, expenses, assets, liabilities. Use it to mentally check you have classified every single trial balance item correctly before moving on. It works like a charm. We're going to leave you today with a high-level A-star challenge to test your advanced technical methodology. Pause and think about this. If an irrecoverable debt is ignored in the trial balance, how does this specifically violate the prudence concept and mathematically affect the owner's equity? Write down your answer to this exact cause and effect chain. Apply everything we've covered today, trust your procedural logic, and you will absolutely crush the IGCSE accounting exam. Keep pushing your boundaries.